Hello, guys. It's your friend, your analyst Samuel. You are welcome to today's market analysis and market review. I hope you are doing great. All right, let's jump into today's analysis. And then, as we look at the pairs we have for consideration for this week, I would like to talk about something which I have actually not told you guys on this channel, but I believe if you have been trading for some time, perhaps you could have, heard about the term market geometry. Okay, that is basically what I would be talking about tonight, and then I will be making my analysis, on market geometry. Someone may be thinking or may assume that why is he jumping strategy. I think this channel is solely for Elliott wave analysis and Wyckoff analysis. All right, but the truth of the matter is, as an Elliottician, what you should know is that there is a convergence point. There is a point where you would need the knowledge of market geometry in your analysis. That is something I would like to tell you for a fact, that in your trading journey as an Elliottician, you would need the concept of market geometry in your trading if you really want to take this, to a new level. If you wanted to take it to a higher level, and then market geometry is actually, a form of technical analysis. It's an approach, employed by traders and investors to analyze the financial market. And then the core idea behind the market, geometry is that, price movement in the financial market, can exhibit geometric relationship and patterns. That is just basically what it's all about. And as an Elliott trader, Elliottician, you would also realize that we identify patterns. Trading is actually a game of pattern recognition. If you can recognize pattern, you will do well. You will do well. So that relationship between, that geometric relationship and patterns that repeat over time, that is what market geometry is all about. And then part of what, even most traders, what they do, what they employ in their technical analysis on a daily basis that they wouldn't know it's part of, market geometry is trend line. Trend line, when you draw a trend line, you are looking for break and retest, you are looking for, support and resistance and, things like that. If you are, looking for retracement, you look for Fibonacci, Fibonacci retracement to maybe 0.618 region or 0.786 or 0.5. So that retracement is also in line with market geometry. What you are doing is you are just trying to identify patterns that is being repeated over time in the market. So and then when we talk about market geometry, you'll be talking about the father of market geometry like Gann, and then maybe Scott, which has to do with the harmonic pattern. So I'm going to talk about one aspect of the market geometry, which is harmonic pattern. So harmonic pattern trading is very key, especially for an Elliottician. If you have studied harmonic pattern trading properly, you realize that some of those patterns actually are in tandem. They confirm our outlook. And then those patterns, I would just advise that you can, after this video, you can just do an exercise, give yourself an assignment, read about it. There's about 4 or 5 basic patterns that are common in the market. And then this is the work of Scott M. Carney, you understand? That is the work. So we are giving credit to the veteran trader who developed this strategy. So we are using it, to confirm as a confirmatory tool, you understand, in our analysis. And what are those patterns? The patterns are Gartley, butterfly, bat pattern. These patterns can be identified in the market. So what we do is that for me, or on our floor, trading floor, what we do, we do our analysis purely on Elliott wave using a particular broker. Then we use another broker, to do analysis of harmonic pattern. So we look for area of confluence. That area of confluence becomes our kill zone, becomes our strike zone, our key level where we look, to take action. So that is actually what we do. Of course, as an Elliottician, you need that pattern, to confirm your analysis. So when harmonic patterns align with Elliott wave count, it provides increased confidence in the potential market direction. That is just it. So before I start showing you some of the patterns that we have identified, you really don't need any software to do this for you. You just go through the harmonic pattern, maybe textbooks or ebooks. Just look for those ratios and then you can plot them on the chart. That is basically what we do. We look for those ratios. There are some standard ratios that market will retrace to, in which you can actually draw your 5 points patterns. I would actually show you an example of that. But before we go into that, let's look at the review of our analysis for the previous week. The review of our analysis for the previous week. All right. Last week, our analysis was solely on USDJPY and AUDJPY. However, we said that we had some analysis trades that were active and were, as at the time that we did that analysis. So some have not actually fully played out. But let's check the ones that have been, that have actually fully played out last week, and then let's identify those ones that are still running, so that we can actually keep an eye on those trades so that we don't overburden ourselves or we don't take too many positions. This is also very key. So, but for those who did not take those positions, this analysis is also a very great one that you can use as a guide. So, for the analysis that we did last week, AUDJPY, let's look at where the market currently is using Elliott wave. So, last week, we said this zone would be a very great zone, this particular area, and then when markets came there, we entered here, and then so we are in profit. For those, we identify two regions, point of entry, POE, the first being this area, then the second being here. So the first is actually in profit, while the second is in negative because the market tapped and broke out, but we have not seen a proper breakout of that zone. So let's check the analysis on TradingView to really ascertain where we are in the market right now. So this is the analysis. We said that the market here, this is what I said. My anticipated price region for the completion of this correction is identified as this and this. Once this correction is completed, I expect the bullish trend to continue. So now this is not what I'm talking about. This is the particular area. Two possible scenarios now. Presently, the pair appears to be in the process of forming wave C of wave 4, This is wave 4, entirely wave 4. So we have had wave 1A, wave B, and then this is wave C of wave 4. So what we are expecting is a pullback. So okay, and my projection suggests that it is likely to decline in order to complete the wave 4. So we are expecting the completion of wave 4, to drop, and then wave 4 correction. So two possible scenarios are, there are two possible scenarios. Number one is a pullback to 95.25. So this 95.25 region is the pullback we anticipated, and that was what the market did. And the trend line break at this zone. So we have had the pullback and we entered there, which was actually a very low risk entry. And then here we saw a breakout, but it was not a proper breakout. Of course, the trade is active at both ends. So both are the areas where we anticipated. So let's see what the markets gave us for that week. So this is what happened. The market came back here, and then so we are in profit, and I think I updated it here that depending on the entry point, if you entered at the pullback, we are up by 73 pips. So that has given us 73 pips. If at the trade line, then the trade is now active. So at this point, that was when this analysis was updated. All right, so we have 73. For those who may be in drawdown, will be maybe like 5 pips drawdown for those that entered on the second entry point. So that is one of the analysis. Then the second one is actually EURGPY, EURGBP. What is our result? Okay, this particular trade, a triangle break and retest, and then we had this break and retest at this zone here. We expected break and retest, and it happened exactly here, break and retest, and we entered on this. So when the market candle closed, so this was our entry point. We entered somewhere here, and then look at it, we have had 96 pips, and the trade, I think, is closed. Yes, it's closed. Let's see what we have here. Okay, yeah, it has been updated here. Yeah, trade closed, target reached. So what happened is we can play the trade also for you so that you can see the before and after. There is no faking it here. We are professionals. That is what I would guarantee you. We are professionals. So this is it. The target is hit. So we are actually, this is a career path that we have chosen for a long time now. So and then as a professional, you have to be as transparent as much as possible. So EURGPY also done. For gold, last week we said that we were going to see a pullback and then the continuation, but I didn't update that. Analysis was updated on our VIP. Sorry about that. So I said here, we were here, and I said we're going to see that is the pullback. This is the pullback that we experienced, that we forecasted. And then, we closed partial here for some of our trade. We closed some, and then the market continued again. So as it stands, the market has made another 800 and something pips move in our favor. So if you count overall what we have made on gold, we have actually had almost 2,000 pips, 1,820 pips movement on gold, and we are still going here. So we have moved halfway, and because we have moved halfway to our target, we have closed some of our targets. We have closed some of our positions, rather, I beg your pardon. So we have, just few positions left. So this is a good trade for us. So far, it is the best trade of the year. We've not had this kind of move on any pair this year. All right. So we have done a review of AUDJPY, which is currently active. For those who entered on the first point, we are up by 70 something, 73 pips. For those who entered on the second leg, we are in negative of -5 pips. But for those who took EURGBP, that trade is completed. Congratulations to those who has a whooping 96 pips. So for gold also, we had additional 800 pips. Anyone who followed us, congratulations. So what we have seen here is a complete impulsive movement on gold. So for wave one, so what we are expecting here is what is called, we're expecting a retracement, another retracement, but this will be in wave two. And then this kind of retracement is not like the first one. It may be deeper, and then we are expecting something around this zone. So these two zones, we may see that move to this particular level, this particular area. So these are the two areas we are expecting, a slight pullback. We may see a pullback to this zone. We may see a pullback to this zone, anywhere around this zone. So the market maker can, the composite operators might bring the price down to that zone. So we are not going to be, long on gold for this week. We are going to wait until this pullback, and then we would continue. So that is our outlook on gold. I think we've completed our review, and then now we are now moving forward with our analysis for this week. We are moving forward with the analysis for this week. All right. So this is our outlook on gold for this week. This is our outlook on gold for this week. So please, anyone who wants to go long on gold should wait for that pullback. It may not get this far, but you need to look for exhaustion candle. There are exhaustion candle that will signal to you that the market is about, to start the bullish continuation. All right. So what do we have this? Okay, we did for USDJPY last week. We said we should be expecting some sort of a down move here. This was exactly what we did. If you look at the long-term view, it's a long-term view. I said this may take about 3 to 5 months to play out. This is what we are expecting. And then just like we analyzed, there was still that loss of momentum. The market is currently losing momentum here. Of course, we may still see a rally, and then on this, we'll just need a blend of market geometry and then our Elliott wave analysis, and look for possible area of entry. So we are going to combine market geometry, which is harmonic pattern. We are going to combine it with USDJPY so that we can have a solid, interpretation of what the market is currently doing. All right, so this did not move at all. So this is just consolidating. We saw a move to the downside a bit. This was already before we did the analysis, but this particular one it's like just moved in our favor, like by 100 pips. Wow, that's a good one. We got a 100 pips movement to the downside. Wow. So wow, that's fantastic. All right, but it's still like a rejection to the downside. Is showing like an exhaustion. So this is not like a successful trade. It is still, in the making. It is not successful yet. So I wouldn't want to add this to one of our success trade yet. We need to see that significant move. All right. All the same, it's still, for anyone who took this trade on an intraday basis, must have actually made something on that particular pair. All right, let's go back to what we have for today. What are we looking at today? We are looking at this analysis. Is still fresh, is still valid. There is no invalidation of this market outlook, but we want to now look at confirmation. We want to confirm this outlook on using market geometry. This is also market geometry. It's just another branch, another approach of market geometry. Elliott wave is a form of market geometry. Trend line is a form of market geometry. Channel trading is a form of market geometry. Harmonic pattern is also a form of market geometry, because they all deal with pattern recognition, repetitive patterns that that occurs in the market, identifying those patterns. So what we're going to do now is I'm going to switch to check what we are going to how harmonic pattern confirmed our analysis on EURGBP, the one that that is successful, that is, we know that is already closed. Let's see if there was any analysis, any pattern that we saw on that particular pair that confirmed, all right, okay, this is our analysis. All right, so what happened before was that we saw this particular pattern. We saw this particular pattern, and then which is a bearish pattern, and then so this pattern did not give moved in our favor. Of course, you don't expect a full delivery for some of this pattern. This is this is where technicality comes into play when you are using harmonic pattern. It may move halfway, it may move quarter of the entire move, so you don't expect that it's going to move completely. So this is where technicalities come into play. All right, but when we saw this on the harmonic pattern, there is what is called a support zone here. The support zone held. When you are trading harmonic pattern, you need to identify your support and resistance zone, and those are your first target area. So the market came, at the this particular potential reversal zone, PRZ. The market reversed and then came to the resistance zone that has now turned support, and then market found support on the resistance zone. It turned support here, and then it came back again, and then it's held the price. So market came back, and we saw engulfing signs of bullish pressure. This is a bullish engulfing, and then so that gave us an indication that the market was going to go up, and that was what happened here when we did the analysis. So here there is nothing of such harmonic pattern here. This is pure Elliott wave. But if you compare that result and what happened, this was the period when the market found support here on that zone, and then before it began to move to the upside, and this is actually it. So this is how it confirmed our Elliott wave analysis. So what are we expecting on EURGBP? Even though our Elliott wave analysis is completed, our price objective has been met. However, we are still seeing the possibility of a rally to the upside. That means the wave 5 is not completed yet. This is our wave 5, but from a harmonic perspective, the wave 5 still has the possibility of extending beyond this level, and that is what harmonic is telling us, that although Elliott wave is correct in telling us that the market was going to go to the upside, but the bullish movement is not completed yet. So we are expecting a possible rally to the upside and a reversal to the downside. So, and when that happens, then it forms a pattern which is called emerging. That's a shark pattern, but it is still emerging. It is still in a phase of forming. So what you need to learn is the ratios where the reversal will take place. So once this ratio confirmed, these are the ratios that you will use to identify your patterns. This is not a video to actually educate you on how to trade using harmonic, but if I do get a number of requests, I can do a video about that. So what we are expecting is a rally again from harmonic perspective to this zone before we can now see the move to the downside, which is the reversal. All right, so that is first analysis. The second one, I promised last week that we are going to do Amazon and then stock market analysis, and that has been done. I just want to present to you. Sorry, I couldn't upload during the week. So what we are seeing on Amazon is we have seen the completion of 5 wave impulsive move to the upside, wave 1 to 3, which is like the longest, wave 4, wave 5. This is following the principle of alternation. This is a deep correction and we are having a shallow correction. So if you have a deep correction in wave 2, then you should expect a shallow correction in wave 4. That is according to the principle of alternation in Elliott wave analysis. So from our own perspective, Elliott wave analysis, we can see the completion of the first impulsive move, and then we are currently in a corrective move phase. So we have seen correction to the downside with A, B. So wave B seems to have been completed. We have seen 3 move A, B, C in wave B. So what we are expecting now is move to the downside to complete wave C. So what is our target zone? We are targeting this particular area, anywhere here around 112.62. This area is where we are expecting Amazon to come down to before we can now be looking for the move to the upside. So this is our outlook on Amazon. So, and once that completion is done, then we have completed the corrective phase 2, wave 2. This is wave 1, wave 2. That's the larger degree wave 1 and the larger degree wave 2. But we are currently in the corrective phase of the larger degree wave 2. All right, so and we are in the phase C of that correction. All right, so that is the second pair. The third one, which I would also like us to look at, USDJPY. Like I said, we are expecting the move to the downside. But what is harmonic pattern telling us? Do we have any contrary view using harmonic theory? All right, so this is what we have, harmonic pattern, beg your pardon. So harmonic pattern, based on our calculation, we are seeing the possibility of this pair forming a butterfly, a bearish butterfly. So in that case, the price objective for the formation of a complete fully formed butterfly has not been met, and if that is what the market maker will do, then we may see a rally, a somewhat slight movement to the upside, maybe about 50 pips so to the upside, then before we'll now see but overall the general outlook is bearish. So this is further confirmed. Our bearish outlook on using Elliott wave theory is further confirmed by our harmonic pattern identification, all right, on USDJPY. That is the third one. So on gold, is there any? I don't think there is any confirmation using harmonic pattern. For AUDJPY, this particular pair is still bearish from Elliott wave perspective, and then we are still going to maintain that outlook. Let me check if we do have any confirmation of that move using harmonic pattern. Nothing here for harmonic pattern. All right, for NZDUSD, like I said the other time when we did our Elliott wave analysis, I said we're in wave 3, 4, 5, and that was actually what happened here. Look at it. This is wave. This was what was presented to you guys, my friend. So wave 3, wave 4, and then we missed out on this particular trade. We lost. This was negative for us, but we are seeing the completion of wave 5. We are now seeing the price coming to wave 5. So we are still expecting the move to the downside using Elliott wave analysis. And then when you also check, to confirm using harmonic pattern also suggests that we may likely have a bath or shark by the pair may still come down before they move to the upside, which is like a bullish pattern. This is what we have using harmonic pattern. This is what we are looking at. So we are trying to combine the concerted might of Elliott wave and harmonic pattern in order to make informed trading decision or investment decision. All right. So what do we also have on GBP USD? Let's see what we have on USDCHF. USDCHF. Okay, on USDCHF, which the analysis was done on Elliott wave perspective, the other time I said we are going bearish, and that is also confirmed. And from Elliott wave perspective, we even have enough room to the downside. So, but from harmonic pattern, what do we have? Harmonic pattern suggests that the bearish continuation is still going to come. We are still expecting further move to the downside. So if we are going to target, so our first target will be around maybe 100 or 90 pips, then we can see a slight pullback and then the further continuation to the downside. So we are expecting bearish move on USD CHF also, because a pattern was also, is in the process of completing itself. All right. So what other pair? USD card. What do we have on USD card? USD card is actually okay. This is the combination of Elliott wave. We don't often do this, but nonetheless, what are we expecting? We are expecting what is called using Elliott wave analysis. We are expecting a bearish move to the downside. We have ABC. This is 1, 2. Then we expect 3, 4, 5. So, and then from harmonic pattern, we also are in the process of forming this particular beautiful bullish pattern. So if that is going to be the case, then we expect the markets to come down to this particular zone before it will continue to the upside. So these are the pairs that we are looking at. USDJPY, USDJPY we are bearish, USDCHF we are bearish, USD card we are also bearish, and then before we can now experience the move to the upside. What other pair are we looking at? NZDJPY. NZDJPY, we are likely going to go to the upside. We are likely going to go to the upside from harmonic pattern analysis. But from Elliott wave analysis, I have not actually done any analysis on that, but I'm going to update you as time progresses. So that is all for now, guys. Thank you very much for your time. And then let's keep decking the charts. Let's keep learning. Let's keep learning, because this game, this trading is actually a very beautiful and lucrative, deal or business that you can do if you can actually commit your time to learning and learning from, proven mentors, and then from people who have gone ahead and has actually made significant impact in the industry. So thank you very much, guys. I love you. Keep sharing the link, and we need to see your comments and likes. Subscribe if you have not subscribed to our channel. And then by next week or during the week, we are going to do like an inventory of our results so far. Thank you very much, and bye for now.